What's going on, guys? It's Kyle. Welcome to the Stock Goat YouTube channel. In today's video, we're going to be covering the overall market, and we will also be covering the SOFI stock. Today was an absolutely insane day in the market. If you take a look at some of those indexes, they were trading like penny stocks. Down 1%, up 2%, down 1%. Break even, finished red at the end of the day, guys. That is insane volatility. That volatility is what is bringing down the market every single week. For the past 5 to 6 months, if you look at the corrections of when they have started. So the past 6 months has been absolutely terrible for anybody trying to invest for the long term. This has definitely been a day trader's market, trying to trade off that volatility. In today's video, we're just going to be covering a couple of things I'm seeing with the SOFI stock, a couple of things with sentiment, couple of things with, Nasdaq correction. Just get an overall feel for where we're at inside of the market. If you feel any of this information is useful, be sure to subscribe to the channel. We will be keeping you updated daily on all the breaking news covering the SOFI stock and also the overall market. And be sure to drop a comment and don't forget to smash the like button. Let's try and get this video over 1,000 likes. Let's get into the video. All right, guys, take a look at that 6-month chart. That is going to give us the details that we really need to see where we're at with these high growth, high innovation, technology stocks, okay? Because that's where the Nasdaq is. It's tech weighted. We can see we're down about 16% for the past 6 months, but if we really get that high end, it's going to say, over 20% correction. And I believe if you track the exact high, we are at a 21% correction in the Nasdaq. To give you an understanding of how big a negative 21% correction is, if you go back to the 5-year chart, if you don't include the coronavirus crash and we just go over to the 2018 chart, take a look at this, guys. I'm going to take the all-time high and look at that. We are literally negative 21% correction. So this correction right here is exactly the same as 2018, guys. This is literally the biggest correction besides the coronavirus in over 5 years. If we go a little bit higher, we're going to be bigger than the 2018 correction. So guys, as you can see, 2018 was exactly negative 21% correction. We have literally hit 21% correction, this week. That is insane buying opportunity if you can find high quality names that are, strong fundamentally and disconnected from their stock prices. So guys, if we go over to the Fear Greed Index and take a look, we are at 13 right now. And literally last year, we were at about 49. A month ago, we were at 35. 1 week ago, 18. And then just last week, we were also at about 13. So guys, to go much lower than this with a war breaking out, inflation at all-time highs, I don't know what has to happen, but guys, we are so oversold. Companies are disconnected from reality. All fundamentals are disconnected. These are amazing buying opportunities if you find some high quality names. Take a look at Shopify, okay? This stock was surging, the past 5 years. And if we go over to the peak, this peaked over 2,700% gain. Look at where the stock's at right now. It's at $513. But guys, if we take a look, pre-pandemic right here, February, we're at $530. So we have passed pre-pandemic prices. That is absolutely insane volatility. If we take a look at PayPal, PayPal was up over 600% gain. The stock is now at $94. If we look at pre-pandemic prices right here, February 14th, it was $120. It is now lower than pre-pandemic prices. Stocks are so oversold. It is absolutely insane. We can also take a look at Facebook. It was up about 176%. It's about 190 now on the stock chart. And if we take a look at about February 14th, the stock was 214. So all of these stocks are lower than pre-pandemic prices back in 2020, when the market was doing fine. That is absolutely insane to me. And last we have, Block, Square. The stock was over, 1,500% gain. It is now at about $100. Literally before, the earnings came out, the stock was right around like $88 or something like that. In February 21st, you can see the stock was $83. It is literally near pre-pandemic prices as well. You're talking 2 years of gains getting wiped out, guys, on every single company that I have showed you. You need to find the high quality names and take advantage because stocks are so disconnected. I believe, Kathy Woods, what she's saying at these levels, she is definitely right. This could be a massive bull run in the making. I mean, we're talking a correction on the Nasdaq bigger than 2018 almost, literally the exact same right now. So these are amazing times to be accumulating your favorite names. And if we look at, SoFi on Fintel, guys, if you want to know why there's so much short interest, so much downward pressure, so many puts, guys, take a look at who is, owning these puts, okay? You can see it right here. These are all updated just 3 weeks ago, okay? Look at these guys. I can't even say their names. Sequina Hanna. They have 14 million shares worth of puts, $225 million. They're increasing their position. Jane Street, 3 million shares. Citigroup, 3 million shares. I mean, guys, these are massive, massive put positions, especially this one right here. 14 million shares. So these guys are increasing their position. These guys increased their position 1,800%, 3,500%. Citadel is the only one to really decrease their position and puts. It looks like they had about 6 million shares worth of puts. Now they got about under 3 million. So these are the guys holding your stock down. They are either hedging, they are either short with the banks, trying to, make sure SoFi's market cap stays as low as possible to put as much downward pressure on them as possible so they can't make acquisitions, so they can't get more capital raised, doing offerings and stuff like that if the stock raises dramatically. Looks like a lot of people are either, hedging or either want SoFi to fail. And you can see these are massive put positions. So do your research and try to understand why these guys are so short or so many puts at these levels. All right, guys, and we can see here the CFO, Chris, he had a fireside chat with JMP Technology Conference. This is not JP Morgan. It's like another investment firm. We're just going to listen to towards the end of the conference what he said. I really like the ending, so that's just the only part we're going to listen to.
And one of the benefits of our business overall is that we are very well diversified, not just across segments, but also within segments. We have businesses that do extremely well in low rate environments, and we have businesses that do really well in high rate environments. In high rate environments, we're seeing it right now. Our personal loans business does extremely well as people are looking to refinance out of variable rate debt into fixed rate structures, which is what we offer. So we feel like we are much more insulated to some of these macroeconomic factors that are happening and that we're living through right now.
War, inflation.
We've proven an ability to execute and differentiate over the course of the last few years where we've constantly faced headwinds. And I don't think 2022 is going to be any different.
Yeah. So we have about a minute left, but I want to just end on kind of a future forward-looking kind of view of the business. 2021.
This is the best part, the ending right here. This is what I was posting on my Twitter.
Ended on a high note for the company, or just again, tremendous year of growth and execution on adding more capabilities. What are you most excited about? Market volatility considered over the next couple of years for the firm. What gets you most excited, whether it's product launches or other aspects of the business?
I think the thing that gets me most excited is each and every year since I've been here and since Anthony has been here, there's been a lot of building blocks. In 2019, we rolled out SoFi Money, SoFi Invest, SoFi Relay. We relaunched our home loans business. In 2020, we ended up buying Galileo and integrating that business. 2021 was about going public and raising capital. I think 2022, we're finally at a position where all of our products are in place, at least from a table stake perspective, and we have the capital required to accelerate and further our mission and overall strategy. That I'm just excited about executing and delivering on our long-term plan that we laid out for our shareholders, our investors, and continuing to deliver on our mission for our members.
Let's go. That's what you want to hear.
Chris, really enjoyed it. Thanks so much for doing this, and look forward to watching.
So guys, you heard it. He's basically saying this is going to be the year we have everything launched. We can go all in and just keep scaling our products. It was tough to go public. It was tough acquiring Galileo. It was tough getting the bank charter license. All of those things are now completed. The bank charter is really going to start ramping up in Q2. They can go all in, guys, and you're going to see a massive, massive cut in their costs, not having to go through these third parties. And if we just take a look at the overall market, we have about 77 growth stocks we're watching. We can see Shopify did finish, at the bottom, -8%. It seems like their growth is really going to be slowing down in 2022 from what I'm hearing. But you can see all the SaaS cloud plays, CrowdStrike, the Trade Desk, Fortinet, Sentinel One. These are the ones really getting hammered right now. I'm noticing a lot of cloud is, high multiple, and those are really starting to take a hit now. And if we just keep scrolling, a lot of companies didn't finish as bad today as the past couple of days. It looks like a lot of the selling pressure is starting to slow down a little bit. A lot of these companies were break even 1%. We could see SoFi finished the day up 1%, kind of in the middle tier, the top 30. And we had a lot of companies finish up 1 to 2 to 3% gain. And then at the top of the list was Clover Health, a New Holdings. I didn't really see anything for new today. And then a couple of the energy plays. So it looks like a lot of stocks are massively oversold, and we're seeing a lot of selling pressure starting to slow down. Looks like SoFi is up a little bit in the after hours. If you made it to the end of the video, I want to say I really do appreciate it. I enjoyed doing this video for you. We can see that there is massive headwinds inside of the market with war and inflation. That's causing the Nasdaq to hit, 5-year, lows on a correction, if you go back to 2018. This is amazing buying opportunity for high quality names. Once again, my name is Kyle. Hope you have a great day.